Hindalco reports a weak but better than expected second quarter as the copper business surprises on the upside, and a lower dollar also boosts all the commodity stocks. Hindalco is the beneficiary. The management of the company says to us that the copper business can actually continue to post quarterly EBITDA of around 450 to 500 crores.
And it's a weak second quarter for Oro Pharma as revenues, margins and profitability all miss estimates. Investors also bring up the corporate governance issues on the earnings conference call.
The rest of the pharma pack also under pressure in today's trading session. Natco Pharma and Teva named as defendants as Revlimid patent holder Bristol Myers Squibb files an antitrust lawsuit in the United States. Lawsuit is also a potential overhang on other companies with similar lawsuits.
Astral opens with a gap down but recovers off morning lows after a week's showing in the second quarter. InfoEd surges posting a strong set of numbers, the fourth straight quarter of 50% revenue growth.
It's been a weak quarter for BHEL as results miss estimates on all fronts, and similarly we've seen weakness across media companies as well. Zee and Sun TV, both of them reporting a weak performance.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangala Malu. Well, Mangala, we started off well in the green. From the highs of the day, though, we have seen some bit of selling pressure and some bit of profit taking. But after the humongous rally that we saw on Friday, it's par for the course, I would say. And the data points that are coming in as well are still indicating that things are very much bullish. But in the near term, maybe some consolidation, maybe some pullback. Well, that's something that the bulls will be prepared for.
Yep, pretty much par for the course, absolutely flat right now, but it is holding extremely well. So let's get talking about individual stocks itself. It is the fag end of earnings season, and we did get a lot of numbers over the weekend. Aether Industries is the one that reported a weak quarter with the margins actually declining, even as the revenues were flat year on year. Aman Desai, who's the founder and director of the company, joins us now to tell us more. Thanks a lot, Aman, for joining in. The revenues flat at around that 140 odd crores. The margins were a big, disappointment. The EBITDA down by about 9 odd percent. Just wanted to understand, with regards to the fall in margins, was it because of the high raw material costs? Were you not able to pass it to your customers? And you added about, 11 new customers this quarter. How many of them came in from Europe? Because, Europe is facing some macro issues.
Yeah, Magalam, thanks for having me again. It's a pleasure to be here. The quarter was a little soft, but we are upbeat on the quarters to come. The margin fell, and primarily you're right, that is because of the raw material costs going higher. And even though we are able to pass on, say, 75% of this raw material increases, the remaining 25%, which are due to the electricity and energy and coal and such, cannot be passed on. And the freight costs have also increased and such. And so that's why the margin has gone down a bit. If you look at it year on year, I think we have been reasonably improving. Quarter on quarter is a little weak, but I think we expect it to start moving upwards in the quarters to come, especially in the last quarter as our new greenfield manufacturing site is launched, which is on track right now. In terms of new customers from Europe, I think there are a couple of customers from Europe that have been added, and especially in the CRAMS and the contract manufacturing, exclusive manufacturing business models, the other two business models, we are seeing a lot of influx of opportunities from Europe as it goes through this unprecedented time, really, in its industry.
All right. Hi, Aman. Good morning. You're saying that the coming quarters will see a bit of a recovery. So margins of around 26.5%, that's behind us, and we return back to the 29-30%. Are you guiding for that? And also, given that we're going to see a recovery and you have one of those units that will be commissioned as well, what do you end the year with? You're expecting some growth, you told us the last time, in FY23. You have done a 6% growth for the first half. You end the year with?
Yeah, Nigel, thanks again. A pleasure to be talking to you again. Yes, we are already seeing uptake in the current quarter, and especially in the last quarter with the new manufacturing site coming up, we expect to see significant contribution into the revenues. And in terms of margins, we'll definitely be maintaining this and going upwards. And so the goal is to be going back to where we are in the last fiscal year, which is around higher 20s and 29%. And so we'll be looking at resuming that margin in the quarters to come, especially in the last quarter, and definitely a growth in the top line as well with the new products being launched. We are launching 5 new products in the upcoming greenfield site for the first time in India.
What is the growth you want to guide for the year with? You're launching new products. You have a facility that's coming on stream as well. Aman, we were not going to let you go without giving us a number. Give us a broad band at least. Go ahead.
Yeah, Nigel, you put me on the spot at the time, but no. So you mentioned we're 6% up half yearly as compared to last year, and definitely we'll be looking at increasing that further, and hopefully maybe touching the double-digit figure as well. And that's definitely on the cards. Everything is on track, and we are seeing all these things into play, and so we are quite upbeat and quite optimistic.
All right, double-digit revenues in this year, despite doing just 6% in the first half. We take that point. But Aman, just on your segments, you said CRAMS, you added a bunch of clients. You also saw some clients being added on your contract exclusive manufacturing, which is about 12 to 13% of your overall revenues right now. Just wanted to understand these two verticals, what rate will they grow at this year? And they're more margin accretive, I would presume.
Yeah, they're better margins, and so in the CRAMS business, which is 13% of the pie, it is about 70% EBITDA margin, and in the contract exclusive manufacturing, it's right now around 29-30% EBITDA margins. This will go up in the years to come. But in this first half, this fiscal year, as compared to that period in the last fiscal year, our CRAMS has been up 68%, and our exclusive contract manufacturing is up 112%. And so, as I've always mentioned, it continues to be a golden age for the Indian chemical industry, especially in the CRAMS space, and with all the worldwide problems happening, we see this trend continuing on, and these two buckets will grow significantly. And as the years go on, as molecules transfer from the CRAMS bucket to the manufacturing bucket, we'll see a significant improvement in the bottom line as well for these two business models.
Okay, all right. Aman, give us a targeted number where the CRAMS you would like it to go. If I got that right, it's around 13% right now, and it's improved over the last few years, growing on a low base. So what's the targeted number coming in from CRAMS? If you could give us a timeline as well. And the other question is the solar power plant. That got commissioned, right, a couple of months ago. What's the saving on a monthly basis or on a quarterly basis, on a yearly basis? You give us a number.
Yeah, so going to the first part of your question, Nigel, the CRAMS actually grew 68% in the first half as compared to last year. And so, for example, last fiscal year, we did 48 crores. This first half itself, we have done 40 crores, and this is a 70% business model. And so we'll be looking at balancing of this bucket. So in about 2 years' time from now, we'll look at 40% our own manufacturing, large-scale manufacturing, 40% exclusive contract manufacturing, and say 18 to 20%, 15 to 20% of the CRAMS business model. And so looking at growing that significantly and rapidly in the quarters to come and the years to come. And the solar power plant has been commissioned. This is a 16 megawatt solar power plant, which was commissioned about 2-3 months ago. And it is currently operating at 80% efficiency and increasing. And we are looking at saving 1.5 crore rupees per month currently. And that is giving us benefits in the bottom line as well, and saving us tax as well. And so it is already performing well, and we are looking at adding on to more of that.
You said 1.5 crore rupees. Is that the savings that that's correct, on a monthly basis?
Yeah. On a monthly basis, yes.
All right, take that point. And as far as your third site, which is likely to come on stream by December 2022, just wanted to understand what could the inventory turnover on that one be? I mean, how much could that aid your revenues going forward, and how fast do you expect it to reach optimum capacity utilization?
Yeah, Mangalam, great point. So in fact, in the upcoming greenfield manufacturing site, we are launching 5 new products, which are advanced pharmaceutical intermediates, all for the first time in India. And these are very much in demand in the current market, and Indian pharmaceutical industry is completely dependent on Chinese suppliers for these 5 products. These are higher value products. And in fact, 3 of these products we have already launched partially in a limited fashion in our current multi-purpose facility, the site 2. And so the idea is that the validations are done from this site. The quantities are already given to the customers from this site. And so when we start the new production plans come December and January in a stepwise manner for these 5 products, we'll be hitting the ground running. And so the idea is that we'll be maximizing the capacity utilization relatively much faster, and the corresponding revenues to the customers will also pick up at the same time because the validation is already done. And so we are looking at, as I mentioned, we are looking at adding significant revenues from this new site in the first quarter, and hopefully all of these factors will aid that statement.
Finally, before we let you go, you said you're looking to add significant revenues from this, and it will do extremely well. Just wanted to understand what that means in terms of numbers. I mean, could you quantify it? What's the money that you're putting in on this, and how much it could mean in terms of incremental revenue for you?
Yeah, so in terms of the capex that we have done, I believe it is around 200 crores of capex on that side. And historically, our asset turnover ratio has been 2. And so, that's, if you do the math, that's what we're expecting, and maybe a little bit better because these are more high value-added products that are going into this plant. And so that's the kind of math that we're anticipating from this new upcoming greenfield site. And that is in the next fiscal year, we should be seeing the complete contribution from that. Please keep in mind, we are also focusing on 2 new other greenfield sites, Site 4 and Site 5, and the Site 5 being in Panoli, 13 times the current manufacturing site. And so those plans already are on the anvil as well.
Okay, Aman, always good hearing your thoughts. Thanks so much for stopping by. Wishing you a better second half of the year. The last quarter, the street is a little bit disappointed, but you're saying you have a vision going ahead. So wish you the best and look forward to chatting up with you rather soon.
Nigel, Mangalam, thank you very much.
Well, for the time being, though, let's move on. Let's move on to our special segment where we get you a few ideas for profit from Money Control Pro. Jitendra Gupta of moneycontrol.com joins us to talk about a stock that is tracking rather closely. Jitendra.
Hi, thanks. I think Power Grid offers good value. Stock has corrected marginally in the last 5 days. It is currently trading at 1.6 times its fiscal 25 estimated book value, which is quite good considering dividend yield of close to 7%. Moreover, next year transmission capex is expected to improve, and that should support growth. It is estimated that close to rupees 1.24 lakh crore would be invested in the transmission over the next 5 years. Out of this, close to 45 to 47,000 crore would be invested in the year 23-24. The next 2 years are going to be better. Companies like Power Grid would benefit. In fiscal 23, Power Grid is looking to undertake a capex of close to 8,800 crore, which is a growth of almost 17% compared to last fiscal. That apart, the company is currently having projects worth 45,700 crore in hand, which provide reasonable growth visibility for the next 1 or 2 years. Moreover, earnings should be better next few quarters, considering lower cost, improvement in margins, reduction in interest costs, and other factors like monetization of assets, contribution from other emerging businesses like smart meters, supporting overall visibility.
All right, thanks a lot for that. With that, we take a short break. On the other side, we have another management joining us, that of HEG, to discuss their second quarter numbers.
Well, HEG posted a good set of numbers in the second quarter. The margins improved sequentially. The revenues as well did pop up. Well, to understand what went on in the past quarter, and what about the company's plans to diversify into a new scope of business? Well, we're joined by the Executive Director, Mr. Manish Gulati, as well as today, since we want some clarity about this capex they're going to incur, the Vice Chairman, Riju Jhunjhunwala, as well joins us on the show. Hi, Manish and Riju. Thanks so much for joining in, and always good connecting with you guys. Well, Manish, first let's take out some of these numbers with regard to the past quarter. You have done margins closer around 30%. You have warned us in the past, don't dream about those high margins. What's the steady state number we should look at in terms of margins going ahead? And also, if you could tell us, is there scope that realizations go from here higher as well in the coming quarter? Go ahead.
Okay. Thanks. Good morning, Nigel. See, if we, for these 2 quarters, Q1 and Q2, we have been, first of all, working at our full production level of mid-90s. And but this quarter of Q2, our sales has been down, mainly due to pushback of orders from Europe and then Turkey and Middle East, because slowly the toll of war is taking on the economies, and steel being closely linked to economies. I mean, quarter on quarter, we have seen a decline in steel production of 6.5%, even if we exclude China. So although in the Q2, July to September, we went full production, but sales-wise, we were in early 70s. And the volumes are continue to be under pressure for this quarter, October to December. And possibly if it turns around by Jan to March, that we will see, because we are moving quarter by quarter.
So could you give us a sense of how much did the volumes decline this quarter? How much have they declined in the first half so far? And what does that do to your target? Because you were targeting, what, flattish volumes. Is there a risk of it actually being negative for the year?
No, it won't be negative as such. You see, Q1, April to June, we were full blast. We were made around mid-90s, sold mid-90s. But in the second quarter, July to September, although we continued to go full production, but we sold in mid-70s, I would say. Early 70s, that was our utilization, sales utilization, I would say.
Okay. So could you quantify how much it was down year on year, the volumes?
Year on year, if you Q2, I mean, that's what I said, from 95% to early 70s, let's say 70 to 73%. So that's the quantum.
And you're saying that volumes for the year will be flat, right? You're sticking to that.
Not exactly. They'll be down because the rest two quarters, I mean, the quarter of October to December,
Yes.
volumes down compared to this. Maybe we land up with let's say 60s capacity utilization, sales utilization, I would say. But we'll go full production still.
Now, production aside, Mr. Gulati, we're trying to get a number out of you. We'll work with a 5% degrowth for the year on volumes front.
Maybe it's 5 to 10%.
5 to 10% volume degrowth. We got that number. What about margins? Should we work with high 20s margins, 30% margin? What should it be? Give us a range.
Yeah, that's a little difficult to hazard a guess. But yes, Q1 and Q2 were the good margins, and Q3 and Q4 may not be at that same level. So there's a pressure on margins because as volumes go down, the competition for business increases, and price takes a hit that way. So we expect prices to be marginally down for Q3 and maybe Q4.
All right, so we understand that by the end of this year, volumes will be low by 5 to 10%. Margins may not sustain. The first half margins may not sustain. And because of lower volumes, your margins may also come off. But at the same time, you said that you are producing, targeting 100% production this year. But could you give us a sense, you had the capacity expansion plan as well, you know, from 80 lakh tons, it was about to go to almost 100 lakh tons, rather 80,000 tons, it was about to go to 1 lakh tons. When does that come on stream? How much are you at right now?
See, by December end, we were supposed to complete all the processes, all the shops. But that date of December is slightly postponed to maybe February because there's some key equipment still awaited from our overseas suppliers, mainly European suppliers. So possibly the date of our target of 31st December has moved to February. It's not a great delay, but yeah, delay is a delay.
A delay is a delay. We take that, Manish, and you've been quite candid about that. Now let's get in Riju. Riju, we're looking forward to having the chat with you. The street is reading this at maybe a bit of a positive going by the stock price. That you're going in for some diversification. You're looking at manufacturing, graphite anode for lithium ion cells. So could you tell us first, clarify it? It's no way related to graphite electrodes, right? It's not a forward integration or something. That's point number one. And give us a sense about, you're looking to spend 1,000 crores. What is the rough asset turn you believe on this business, and by when will it come into the books? Go ahead.
So I'll tell you, Nigel, it's not really a forward integration or anything, but it is very much related to the graphite space. So every lithium-ion battery cell has 4 major components: the anode, cathode, electrolyzer, and the separator. Anode is the anode powder constitutes around 15% of the cost of the lithium-ion battery cell. Today, in India, there are no cell manufacturers. You might have heard of, government coming out with big PLI schemes, basically, and the big companies signing that. And as and when you have these plants coming up in India, you will have a huge requirement of the graphite anode. Now, graphite anode is nothing but we make graphite electrodes in HEG. This 100% subsidiary of HEG would be manufacturing very fine, high-level graphite powder. So it's, again, a related industry. Our raw material would be very similar to what we use, but instead of producing electrodes, we would be producing a very fine this graphite anode powder, which would basically go into lithium-ion battery cell manufacturing as this sector explodes in India.
Right.
And
we understand the prospects.
Green hydrogen and
we understand the
also
prospects.
into green. Yeah, and also into stuff like green hydrogen and all of that. So everything to do with green energy, energy storage.
Right, we understand the prospects, Mr. Gulati. The world is going towards green energy, and there is a lot of push towards making lithium-ion batteries, etc. And your product will cater to that itself. What we want to understand is 1,000 crore is your capex over the next 3 years. Then you have another 1,000 crores coming in later. So in all, you'll be putting up 2,000 crores. How much does that mean in terms of incremental revenue opportunity for you?
So in terms of our first 1,000 crores, we will produce around 10,000 tons of this graphite powder. And we expect to complete this in the first quarter of 2025. Once this phase is complete, that should give us at least 800 to 1,000 crore of revenue in coming out of this with I mean, it's anyone's guess, but it's a very high quality product. So you will see a good 30-35% margin as far as this product is concerned.
Got it.
And immediately as soon as this is done, we will be setting up our second facility
Riju,
for another 10,000 tons.
Right. So Riju, asset turn of around 1:1. 1,000 crores you put in, 1,000 crores of revenues.
Yes, correct.
With margins of around 35% is what you're saying, 30 to 35%. So it could be a little value accretive in comparison to the business that you're doing currently. Are we getting that correct?
Most definitely. Most definitely. And just 1 minute about the potential, if I was to tell you, I mean, there are 3 companies which have signed PLI schemes for cell manufacturing in India for around 40 gigawatt hour in terms of the battery. So that 40 itself will require 40,000 tons of anode powder.
Okay.
And then you're talking about another 100 gigawatt being signed.
Okay.
And all of this today is being imported from China. And like you're seeing, there's a huge backlash.
Riju, we barely get to chat with you. So very quickly, just a couple of word answers if you could give us. How will you fund this? Will it be all debt or will it be some equity? Very quickly.
So this will be a mix of 70-30 debt is to equity.
Lovely.
And this would be a 100% subsidiary of HEG.
It's been good chatting with you, Riju. Thanks so much, as well as Manish, for stopping by and giving us all of those details. We tried to squeeze in as much as we could in this short chat that we had, but we look forward to chatting up with you during the course of the quarter. For the timing, slip in a short break, come back, continue our focus on markets.
Welcome back. Just keep an eye on Indian hotels. Saw big drubbing on Friday's trading session. This morning also opened lower, and now we're seeing a bit of a recovery, 4-5% from the lows, currently closer to the high point of today's trading session, just broken into the green. But we're out of time on this edition of Chartbusters. As we do that, let's give you a quick reminder that Ramesh Damani is back with us today on Wizards of the Street show. Catch the market veteran's journey and inspiration behind his success in our special at 3:30 p.m. today, only on CNBC-TV18. Thank you for watching. Stay tuned.